Would you believe that Nike, the most dominant consumer apparel brand on earth, has been in a structural markdown for 4 straight years? Down over 35% this year, retail has fully capitulated. Is this the ultimate contrarian buy? Nike wrapped up the latest session down 1.04% to close at $41.05. Don't let the small daily delta fool you. This mega-cap asset has seen its valuation sliced in half since 2022, making it a massive laggard in the consumer space. If you're tracking high-alpha value rotations, consumer sentiment setups, and institutional block flows, smash the like and subscribe. Join our private trading desk community via the description link below to access live charts. Chasers assume nobody is buying the product anymore. False. Nike still pumps over $46 billion in top-line annual revenue. The structural headwind isn't raw demand. It's that full-price sell-through rates are facing severe competition. Legacy-run categories are getting heavily disrupted by upstarts like Hoka and Own, while Adidas recaptures mindshare. In the Far East, domestic players like Anta and Lean-In are eating market share. Nike's absolute monopoly is over. The headline earnings print initially looked like a beat. Q4 revenue hit $10.97 billion, edging past consensus alongside an EPS beat. But checking the spreadsheet reveals that a massive chunk of that margin beat came from one-off customs line items. Strip out those arbitrary tax adjustments, and the fundamental core earnings are far less impressive. That's exactly why the institutional desks refused to chase this print and aggressively re-rated the forward growth outlook downward. The primary concern on Bloomberg terminals is Greater China, where quarterly revenue contracted over 10%. The region has flipped from Nike's primary high-margin growth engine into a severe structural drag as macro demand pivots. Bulls are betting on the World Cup catalyst. With the tournament in the knockout stages, Nike's roster gets massive global eyeballs. Historically, this peak sports calendar marks a major cyclical high point for brand equity. But Wall Street desks couldn't care less about superficial social media metrics. The buy side wants to see physical order books expanding, wholesale inventories clearing, and real revenue inflecting on the next quarterly print. Mechanically, technical models are printing a technical strong buy due to extreme oversold metrics. Sell-side consensus is pinned near $53, leaving a decent gap from this $41 floor. But targets are fractured from $23 to $90. The real execution metric to watch isn't brand power, it's pricing power. Can Nike force consumers to pay full retail margin again? If top-line growth scales, multiples expand. If growth flatlines, the equity chops sideways. Nike is currently a pure psychological battleground. Bears call it an archaic legacy brand, while value desks argue a global category killer cannot bleed forever. The incoming quarterly data prints will officially settle the debate. Let's audit your consumer portfolio. If you had to buy one sneaker stock today, are you allocating capital to legacy Nike blocks or shifting your size to high-growth upstarts like Hoka, On, or Adidas? Drop your thesis below. Subscribe and hit the notification bell if this structural analysis gave you an edge. For our live macro updates, entry clusters, and private community desk access, check out the links in the description. See ya!